In this video, we're going to talk about a deep look into Warren Buffett's portfolio. Before starting, please do like the video and subscribe to this channel for future updates. Wall Street and individual investors are smart enough to pay close attention whenever Berkshire Hathaway CEO Warren Buffett purchases a stock. This is due to the fact that riding on the success of the Oracle of Omaha has proven to be a very profitable strategy for many decades. Buffett took over as CEO of Berkshire Hathaway in 1965, and since has presided over the development of more than $645 billion in value for the company's owners. In addition, Buffett has produced an aggregate return on the company's Class A shares, BRKA, that is 3,641,613% during a period of 57 years. This amounts to an annual return of 21% on average, which is effectively double the annualized total return of the benchmark S&P 500 index, which includes dividends over the same time period. Here's the full rundown of what Buffett has been buying. The most anticipated event is not Berkshire Hathaway's annual shareholder meeting or the letter that Warren Buffett writes to shareholders each year. Rather, it is the company's quarterly 13F filing with the Securities and Exchange Commission SEC. Investors are given a glance behind the scenes with a 13F, which shows that most successful money managers have been buying, selling, and holding over the past 3 months. The submission of this support is mandatory for investment managers who have at least $100 million worth of assets under management. Buffett and the rest of his investing team had a lot on their plates during the first quarter as a result of all 3 of the major U.S. stock indexes entering either correction zone or a bear market. Since the beginning of the year, Berkshire has put to use more than $50 billion worth of its available capital. According to the 13F filing that the company submitted in the middle of May and previous SEC filings, Buffett has been responsible for the purchase of the 16 equities since the year 2022 began. Number 1, HPQ, minus 2.96%, 120,952,818 shares. Number 2, Chevron, CVX, minus 0.83%, 120,933,081. Number 3, Paramount Global, Para, 2.88%, 68,947,760. Number 4, Citigroup, C, minus 1.29%, 55,155,797. Number 5, Activision Blizzard, ATVI, 0.33%, 49,657,101. Number 6, Ally Financial, Ally, minus 1.56%, 8,969,420. Number 7, Celanese, CE, minus 1.02%, 7,880,998. Number 8, Occidental Petroleum, OXY, 1.52%, 5,887,618. Number 9, Formula One Group, FWON.K, minus 0.14%, 5,603,705. Number 10, Florin Decor, FND, minus 0.52%, 3,936,291. Number 11, Apple, AAPL, minus 0.81%, 3,787,856. Number 12, McKesson, MCK, 0.80%, 2,921,975. Number 13, General Motors, GM, minus 1.31%, 2,045,847. Number 14, Markel, MKL, minus 0.91%, 420,293. Number 15, RH, minus 2.61%, 353,453. Number 16, Berkshire Hathaway, 2005 BRK.A shares and 6,824,671 BRKB shares. Value stocks are Warren Buffett's area of expertise. When it comes to the vast bulk of Buffett's buying activities, through the first 5 months and some change of 2022, the idea that value is of the utmost importance has been a consistent thread throughout, no pun intended, given the purchase of shares of Paramount. The Oracle of Omaha has made it one of his top priorities to acquire extremely successful and well-established firms at a bargain. For example, Berkshire Hathaway purchased a stake in the personal computer and printing solutions provider HP, amounting to more than 11% of the company. HP has long since moved past the period of rapid expansion that it experienced. However, it continues to enjoy unusually high profitability, and its market value is approximately 8 times the amount of earnings that are anticipated for both this year and 2023. Because the demand for personal computers from both consumers and businesses is largely stable, HP is a relatively safe investment in the market that is highly unpredictable. The same is true for the automotive behemoth General Motors, which is currently selling at just 5 times the earnings that Wall Street anticipates it'll make this year. General Motors appears to have a significant amount of growth runway, despite the fact that there are a number of obstacles, such as supply chain delays brought on by the COVID-19 outbreak. This is due to the fact that the industry is continuing its journey toward electric vehicles. By the middle of the decade, General Motors intends to have invested $35 billion in electric vehicles, autonomous vehicles, and batteries. Banks and energy stocks are back in focus. It is common knowledge that Warren Buffett directs the investment strategy of Berkshire Hathaway to capitalize on expansionary phases of the economy in the United States and around the world. After all, economic expansions typically continue for an abnormally long time compared to recessions. For this reason, Buffett has been buying a lot of stock in financial institutions and energy companies in 2022. In spite of the fact that Citigroup is likely the money center bank that is held in the least esteem by Buffett and his colleagues, they invested heavily in the company during the first quarter, despite the fact that Citi is facing headwinds on the international front and that it's been involved in its fair share of litigation. The company's stock is now trading at one of the lowest prices compared to its book value among big bank companies. The prospect of rising interest rates means that financial institutions will soon be in a position to reap the benefit of a windfall in the form of increased net interest income from outstanding variable rate loans. When it comes to the stock market for energy companies, Buffett's massive wagers on Chevron and Occidental Petroleum most likely reflect his view that prices for oil and natural gas will remain elevated for an extended period of time. Integrated oil and gas companies like Chevron and Occidental should be able to reap the benefits of multi-decade highs in prices for oil and natural gas because there was a lack of upstream investment during the pandemic. In addition, the supply disruption that was caused by Russia's invasion of Ukraine should allow these companies to do so. There can never be enough Apple. In the beginning of 2022, Buffett engaged in buying activity which included adding more Apple shares. Apple was responsible for a staggering 38.2% of Berkshire's invested assets as of the end of the previous week. Buffett considers Apple to be one of the foundations that support Berkshire and a value determiner. It is also a corporation that, in his opinion, successfully ticks off all of the necessary boxes. It possesses an exceedingly well-known brand in addition to a customer base that is extremely devoted to the company, and it has driven the company to continually better sales and profits thanks to its innovation. According to Counterpoint Research, as of the beginning of the first quarter, the iPhone was responsible for accounting for half of all smartphone share in the United States. However, Apple is also a firm that is undergoing change. The company's chief executive officer, Tim Cook, is in charge of overseeing a strategic shift that places a greater emphasis on subscription services. Apple should profit from stronger margins, an even more loyal customer base, and reduced income lumpiness associated with product replacement cycles as subscription revenue rises into a larger percentage of total sales as it continues to become a larger percentage of overall sales. It would also be irresponsible of me if I failed to mention that since the beginning of 2013, Apple has repurchased roughly $500 billion worth of its own common stock. To quickly earn Buffett's favor and respect, it is helpful to have a significant capital return program. Buffett's favorite company is arguably his own. The purchase of shares in Buffett's own company, however, is not disclosed in the 13F filing and may be considered the least shocking of all of Buffett's acquisitions. The findings of Berkshire Hathaway's first quarter show that Warren Buffett and Charlie Munger, who serves as Buffett's right-hand man, supervised the repurchase of more than 6.8 million Class B shares and 2005 Class A shares. Buffett and Munger have been having a field day since Berkshire's board of directors revised the requisite requirements for share repurchases. This comes after more than half a decade in which the company did not engage in any stock buybacks. Since approximately the middle of July 2018, roughly $61 billion worth of Berkshire Hathaway stock has been repurchased. To refresh your memory, the act of repurchasing stock typically has a favorable effect on the value of a company's remaining shares of stock. If a company's annual net income remains stable or increases over time, then decreasing the number of shares that are currently outstanding should lead to an increase in earnings per share. Therefore, stock repurchases have the potential to make a company look more appealing from a valuation standpoint. So, what'd you think about our video? Do let us know in the comment box below. Please like this video and subscribe to our channel for future updates.